The amazing recovery of the Chinese economy. Welcome to another show of The Easy Investor. As always, I'm going to ask you to subscribe and like this video, and I hope you enjoy. After suffering the worst economic contraction in 4 decades of 6.8%, the Chinese economy appears to have rebounded and has experienced 2 quarters of growth so far, with the second quarter increasing by 3.2% and the third quarter increasing by 4.9%. The increase in GDP of 4.9% was slightly lower than the expected 5.3%. However, it still puts China on a very decent growth projection, with the IMF predicting a full-year growth rate of 1.9%. This projection means that China is the only major economy that is projected to grow during 2020, with the US expected to shrink by 4.3% and the Eurozone to shrink by 8.3%. Although things are looking good for the Chinese economy, there are still some risks. The main risk that the Chinese economy faces are currently the external economical and political environment and the loan forbearances and the damage it has done to the Chinese banks. For those of you who do not know what a forbearance is, I had to look it up myself. It is the delay in foreclosure of a property or business that cannot repay their debts. It further delays repayment to the bank without adding additional interest to the loan holder. It is an agreement between the bank and the loan holder to assist the loan holder to recover, and only after their own financial recovery will they continue to repay the debt to the bank. What plan did China implement that assured their recovery? The truth is that China roughly revived its economy in 3 phases. Number 1, the full lockdown of the economy from late January. The lockdown lasted until March 2020. Number 2, as the pandemic was spreading globally, the government realized that there was an opportunity to rev up manufacturing and global exports, especially in shipping medical equipment like face masks and work-from-home technology, something that analysts feared would be short-lived as the rest of the world started opening up. However, China has held onto its global market share. And the third, the second quarter marked the factory recovery, and the third quarter numbers marked the recovery of consumer spending. As the pandemic is under control in China, with still only 85,704 cases in total, with 258 current active cases, consumers were encouraged to venture out into the world, or the Chinese borders, and to start spending. With retail spending in August being 0.5% higher than a year ago, movie theaters have been a hit, with Chinese individuals and families that want to get out of the house but cannot leave the city. And tourist attractions have attracted many visitors, from people wanting to get out of the city that they live in. The consumption is not what it could be, with many pockets still a bit light, but the Chinese government wants a clear focus on local spending and consumption, and reduce their reliance on international travelers. Also, hoping that Chinese citizens will rather purchase locally than internationally. The reliance on their economy, however, remains a risk, as the net exports or trade surplus decreased to $37 billion. This is below the expectation of $58.4 billion. The truth is, the Chinese recovery could mean a number of things for you, depending on where you are in the world and in which industry, but it is most likely good news. Through the Chinese economy's recovery, China revved up manufacturing. This meant that they required raw materials which are imported from different parts of the world, therefore stimulating the global economy and reducing the impact of the pandemic on the global economy. For companies that have branches or make sales to China, the recovery within China has had a good result. Domino's Pizza Incorporated said, strong retail sales growth in China during the third quarter offered a lifeline to the pizza maker's international business at a time when about 300 of the company's global locations were closed by the coronavirus. Chief Executive Richard Allison told investors this month, calling China a terrific success story in 2020. Mr. Allison believes that soon China will become the chain's largest market outside of the US. McCormick & Co., a spice and condiment manufacturer and distributor, indicated that although global sales declined, it would have been much worse if not for the recovery within China and the effect that the Chinese recovery had on their business. Overall, the growth story is optimistic, with a slight bit of caution on the overall sustainability. But in times of despair, some good news and hope is a good thing, especially in economic terms.